Greetings, everybody. This is Jeff Scott. It is March 3rd, 2019, and welcome to this week's top-down review. Please note that the audio may be plus or minus as I don't have my backup microphone today, and hopefully this will be kind of short. I wasn't planning on doing this, but I do think the market's getting to a point where we're getting close to a change. So I called today warning signs of a slowdown looming. I'm thinking more about the market than just the economy, and I'll show you why. And then I'll show you some perhaps positive news if you're actually a bull. So I'm not saying that this run is over, but getting 9-10 weeks up in a row is not what we're used to seeing. This is for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for the tools I use, and no one pays me to say good or bad things about anybody. And trading involves risk. You and your loan are solely responsible for any investment decisions you make. I always like to call out those that have helped me become a successful trader. I started with Cancelim, as described by O'Neill, improved upon by Ian Woodward and Ron Brown, taken to another level by Gil Morales and Chris Katcher. And that's where I started. That's helped me learn top-down investing. It's helped me identify good stocks to buy. George Lee is just a great trader from the Pacific Northwest of Canada. We share the podium often. Van Tharp, sort of the god of money management, position sizing. Cigar from Superior Profit. We become friendly. I use his tools. He did a webinar with me a couple weeks ago that was well received. He's got some innovative and different tools, and I find them very useful. And then this guy, John Person, I think most people know that we're friends today, but I started out as a customer, didn't know him from Adam. I saw him speak at a Traders Expo, bought his indicator package years ago when his son still worked for him, read his books, went to some live mentoring, and then one day realized that when I moved to Florida, he was about a mile away, walked into his office, we became friends, and he has killed my free time because he taught me how to play golf. And now I don't have free time because if I do, I get on my golf cart and I go golfing. I have a lot of tools. TradeStation or Thinkorswim are my main trading systems. Hgsi for analytics. EdgeRater does some really cool things. And then, as I mentioned, Sager's SuperiorProfit.co has got some interesting tools. Unfortunately, some of them require Thomson Reuters Metastock, but it is a good resource for top-down investing. Which I use to supplement Hgsi. The TacticalTrader.com, it's a platform that they took TradingView, which you may or may not use, which is not a bad cloud-based platform. A lot of people write indicators and systems for it. And they took that platform and they added scanner and something that's like a radar screen. And they've got a number of interesting systems. I've been playing with that. I think that seasonality is important. There's some interesting seasonality right now, but I'm not sure that Magenta and Seasonality Trader are being maintained and kept up to date. There's missing tickers, and I get a lot of on Magenta Trader, Seasonality Trader, which has been my favorite historically. It just has a lot of errors that don't get fixed, even though I correspond with the proprietor. HighGrowthStock.com is the website for Hgsi. As I said, I'm not affiliated. I don't get anything if you buy it. But yeah, I do get something. I get to call up the proprietor and say, George, we should have a chandelier stop in Hgsi, and pretty soon you're going to get that in an upcoming update. Under investing strategies, you'll see hundreds of videos, Ron Brown, myself, and others, and you get a free 30-day trial if you want to try out the software with no credit card. Stock patterns are cyclical. We've been in a stage 2 rally for 10, 11 weeks right now since the end of December. The question is, are we starting to slow down, and are we potentially entering that uncertainty phase that can either resolve with a stage 4 markdown or a pause to refresh and a continuation of the current up move? Since I don't know what's going to happen, I've started raising cash, selling premium, smaller positions. And what I've been doing is I've been rolling up a lot of my options, so taking profits off in case this market goes against us. It is very possible, as we saw for much of 2018, for it to pause and go higher, not necessarily roll over. From a sector perspective, if you just take a step back, the weakness in the market, there wasn't much, would probably be real estate was probably the worst, and utilities were the leaders to the downside, I would say. Very strong market overall on Friday. Don't need to go too deep into this because it hasn't changed much. We are in buy signals in all major indices on Thinkorswim on the daily charts. This is E-minis, NASDAQ futures, Dow futures, and then IWM, ETF for the Russell. The VIX has come down and the dollar pulled back, but actually moved up the last couple of days. Now, notice that we are just over the 200-day moving average in the E-minis, the NASDAQ, and the Russell. And we'll talk more about that. When I look at the monthly charts, you can see how big of a run-up we had and that we've been choppy. Now, are we going into a new high here or less than a new high and setting up a big head and shoulders pattern, perhaps, and lead to a breakdown? But right now, the markets are strong. We've had huge moves up the bottom. I just get the sense that the rate of change, the pace, is slowing down. Now, here's some of the underlying things that may or may not be issues. Rates moved up a little bit this week. Certainly not to a point of danger, and that may actually be a good thing. It may mean that the economy is not as bad as some people thought. I think it also means that the Fed may be not as dovish as they first appeared. The yield curve flattened. It's still heading down, but it had a 1-week reprieve away from the inversion line. AD lines, now these are kind of interesting because on the small stocks and the large stocks in white, we still got new highs on the AD lines. But if we look at the NYSE, you can see this week the AD lines actually came in a bit, and that was associated with diamonds and spiders and Qs and Russell and transports all turning down some. And notice with the rates going up, bonds came down as well. Breadth, number of stocks above the 200-day came back a little bit. Above the 40 came back a little bit. When I say a little bit, just a teeny bit. But the 2121, the 12-week new high, new low, actually came and hit the reversal signal. So a couple days ago, I had a signal that this market was way overbought. Short term, it was going to pull back, and we've seen a little bit of a pullback in this, and we'll see if the stock market follows. The McClellan, I think we're seeing some divergence on the oscillator, breaking through the zero line while setting new recent highs and clearly a major uptrend on the daily and on the weekly. So we'll see if that tells us something about slowing. The commitment of traders report by the way it's released, it comes out on Friday and includes data through Tuesday. Here is the NASDAQ, futures. In blue represents the large guys buying, the hedge funds, the professional money managers. In yellow, it represents us. Red would be people are hedging something. If I had a huge position in the NASDAQ and I was concerned if I'm going on vacation, maybe I would hedge it. And I might buy things the other way. Now, I don't care if I win or lose on that trade because I'm protecting a position. So I don't pay much attention to the hedgers. What I want to call out is throughout the last several years in this advance, the professionals have been buying NASDAQ futures. They are now short NASDAQ futures. The E-minis, the same way. The difference is that the individual investors are long while the professionals have turned short. Now, everything I've shown you thus far gives me some concern that this market may be getting close to a top, at least a short-term top, and either pause for refresh or pull back. Here's some interesting things that go against that. I like to look at the best performing stocks over a period of time. I ran this in EdgeRater. This is a 1-month percent return. I mean, one month, a number of months up, number of months down over the next 30 days. The average percent return. And then I made up my own two columns. Percent wins would be how many years it said it was up, that it actually was up. And the score is just multiplying your win percentage by your average return. Then I rank by score, and the two that come to the top are Waste Connection average return of 17%, up 90% of the time, and New Oriental Education Technology, a 10% return on average, up 100% of the time. So that's interesting there. Notice that the small cap bulls are up 90% of the time over the next 30 days. That might tell you something. Here's the Russell 2000 Pro Shares up 92%. Now, what to me is also interesting, some of the stocks I like to play, Lululemon, 12% return, up 73% of the time. Ulta up 91% with 9% return. So I think there might be some plays in there. If you look over here, these are the ones that have predicted to go down. So the VIX has been down 8 out of 8 years. The TVIX. VIXY has been down 8 out of 8 years. Bear Financials down 9 out of 10. When you start to look at what's been down, it's all bullish ETFs. So another sign that, what it's saying is down are all bearish ETFs. So if all the bearish ETFs are going to go down, that tells you the market's going up. So this is contrary to some of the signals we're seeing, and maybe this sort of argues that this is just a pause and not necessarily the beginning of a pullback. Now, what I also found interesting was on CNBC, someone made a comment that March is a difficult month. How could it be a difficult month when all the bear ETFs are down 80 to 90% of the time? So more pictures of where we're at on the buckets. 70% or above the midline of the Bollinger Bands, above the 50, the center moving average. That's bullish. Since we have very few stocks above or below the bands, I don't see a signal saying that we're overbought or oversold. I would not expect to see a Hindi till we get new highs, and there's no evidence of a Hindi today. Market tone remains decidedly bullish. A couple yellows picked up here, but back on Friday, everything turned green. Seasonality, staples, utilities, and real estate showing some yellow, but nothing serious here. Now, the canaries in the coal mine, and this is interesting. I'm going to show you the good and the bad. These were leaders in the past. They had huge run-ups. Everybody talked about them. The FANG stocks, we added a couple things to FANG. And of interest, notice they're going sideways here. They are trapped in between the 200-day and the 50-day moving average. I created, as Ian often taught us, is as the market begins to top or get close to a top, why not put a list of leaders together, create an artificial index, and know that when that index turns over, that tells you the market's in danger. So I went through, these are the stocks I came up with. We'll probably look at some of them as the night goes by. Remember, it's not a buying list. It's a list that you put together to monitor for the market to roll over. From a news perspective, anytime you have the monthly, as John Pearce calls, unemployment report, the employment report on Friday, it's a big news week. You've got some housing starts, you got jobless claims, and you've got new home sales. So some things that are likely market moving. Although it seems like we're getting late in the earnings season, we got some big ones this week, some of which I looked at buying. For example, Salesforce.com, clearly a cloud-based leader, but earnings Monday after the close. NIO, the Tesla of China, earnings Tuesday. Target, Kohl's, Ross Stores, Urban Outfitters, all on Tuesday. Ambarella on Tuesday. Belzun on Wednesday. Dollar Tree, Chico's, Yext, Guidewire. On Thursday, Plug, small stock, but Costco, among others. And then Friday, Big Lots, Navistar, etc. Why do I look at this? Because as it says in the bottom right, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I like to look at this and other lists to make sure I don't have any earnings coming in. And I also do not like to buy stocks right before earnings come out unless I feel I have an edge and I'm gambling. So one of my thoughts, positive but relatively flat week for the markets. All the majors are up, all less than 1%. Positive earnings and revenue are being rewarded while misses in current or forecasts are hammered. Leadership appears to be narrowing. Breadth is starting to contract. A rise in yield may suggest the Fed is not done. News likely will continue to drive markets while there are still lots of EPS reports to come. And I don't expect a video again until April. We'll do my usual top-down review. I'm not anticipating this to be more than an hour. All right. So the next thing I wanted to show you was I like to go into TradeStation and look at my market force and divergence, and I like to look at the major market indexes. I look at 5 or 6 steps. Number one, are they in a buy or a sell signal? Now, I think there's a person buy. I thought there was a person. There should be a person buy signal. It's in a buy signal everywhere else on the weekly. But here's the E-mini, a daily, then a weekly and a monthly in buy signals. That's the first thing I look at. I look at the color of the paint bar. This is an Alexander Elder impulse release. I know that if it's green, I can be long or hold. If it's red, I should be short. If it's blue, I can do whatever I want. The third thing I look at, am I inside the auto envelope? When it gets outside, it comes back in. The fourth thing I look at is there evidence of MACD divergence, which would be red dots, or convergence and green dots? The next thing I look at is, do I have a weekly bongo? And lastly, where is my high jump bar? How extended am I? Because when I get above 95, I expect to see it contract. So E-minis, buy signals in all 3 time frames. Blue, which tells me a little bit more risk, but green on the longer time frames. New monthly buy signal is great. This is high. This tells me to be a little bit careful. And 9-10 weeks in a row is a long time for any market. The Dow futures did have a sell signal come in on Thursday, still extremely strong. The Russell futures, a new sell signal is in on the daily. And then lastly, the NASDAQ, a green bar, buy signals throughout, only at 82%. NASDAQ had an impressive move on Friday and on the week, and right now probably the NASDAQ is the strongest. We look at the dollar, which had been weak. You'll notice that the dollar has a new buy signal and a green bar. So the dollar is showing some strength short-term to go with the long-term strength that it's in. If the dollar is strong, then you might expect gold to be selling off, and gold had a big sell-off. So the next thing I like to do is to go and show you some of my other tools. Let's just take a look at Q today. So Q tells me that in magenta, over one day, 10 of the sectors were up. The only sector that was down in the last one day was real estate, I believe. There it is. Over the last 5 days, only 3 sectors are up, led by energy, healthcare, and communication services. I guess considering that your performance, whether you won or lost over the short period of time, is probably related to how much of your stocks are in those sectors versus others. So this is Q Edge. This is the USA product because I don't trade Indian stocks. It requires a Thomson Reuters subscription. It can then look at the sectors, and I can see that I can look at a one-day window. If I look at a 5-day window and I look at what's been leading acceleration, I can see that consumer staples have moved up. So they were high, they dropped, and they came back. Communication is coming back. Healthcare coming back. Didn't really have that earlier peak. It was weak for some time. So let's look at healthcare. Hit the check mark. And within healthcare, I can see let's rank them by strength. The higher the number, the better. You don't really want to be going long things that are red. Let's take a look at biotech because it looked to be turning around this week. And you'll notice over the last 5 days, if I rank them by pace, which is the movement over the last week, biotech is number 1. I hit the check mark, and it's going to show me the various biotech stocks that I might be interested in. Now, I personally would like to see stocks that are valued appropriately. So when they're magenta or cyan in color, that tells me they're priced favorably. So the highest priced one is the most favorably priced. When I look at the magenta, it tells me that they're overpriced. So I like to look at stocks that have both a valuation and secondary valuation that show it to be fairly priced. Now, I'm going to look later at AbbVie. AbbVie is sold off. Look at the earnings per share growth is strong for AbbVie. AbbVie revenue growth is strong, and it pays a 5.34% dividend. They also have a feature that intraday, out of the market, I can see what's moving by category. Great product. It works for me because I had Thomson Reuters. It is not a replacement for HGSI. It's not a charting platform. It requires a second platform. But it is a backup for me, and one that perhaps intraday may be a little bit easier to use. Going into HGSI, let's take a look at the major markets, Market Analytics Group, Major Markets Plus, and there should be 25 of those here. And let me adjust the size. I was doing some work yesterday. Actually, I recorded this last night. For some reason, it wouldn't render. Nothing better than spending 2 hours recording something and not coming out. So the first thing I notice is when I put the top-down view on, and I look at where the strength was, NASDAQ, mid-caps, Russell, biotech. So small and mid-cap stocks, especially biotech, led. Interestingly, the S&P 500 was in the middle of the run. If I start looking at some of these index charts, just to see where we are in the market, I'm not going to look at it all because they're all going to be very same. I have a new indicator, which is, I can't share with you today what it is, what goes in it. Right now, I'm calling it the JAS indicator, and I've added that to my suite of impulses. So S&P 500 has broken above the 200. The 8 and 17 have also broken above the 200. I'd probably want to be long it here if I own some, but it also has potential risk. What did I just say? Let me say that again. The S&P 500's had a big move. It's pulled back some. I think I dozed off doing this after a red eye is probably not the best thing. Ran up, pulled back to a little bit. It's still above the moving averages. You're still going to be long this market. I just look at the rate of change of this market, and I apologize for my flightiness there. The rate of change going up here, and now it's sort of slowing down. Next, it's going to probably go flat. Is this market slowing down and going to roll over? S&P 500 still looks strong. If I look at the Dow Jones Industrial Average, I just zoned out for a couple of minutes. I hope I didn't say anything bad. Similar pattern, new buy signal there. You'll learn more about my buy signal in the next couple of weeks. Ultimately, it'll be incorporated somehow into HGSI. But it looks exactly the same as the S&P. The NASDAQ, which perhaps looks even better, was ranked higher, and you can see it broke out above the indexes as well. And again, the same pattern that we're not in the same rate of growth as we were here. We're definitely slowing down as we look at this market. So that's why I think the level 3 is coming into play. The Russell will look the same. Russell was strong. And the Russell, God bless it, it had a long way to go, and it got back above its 200 as well. I talked about the dollar being weak. So let's look at that very quickly. Excuse me, the dollar showing strength, not being weak. Boy, this post red eye is a mistake. You can see the dollar is moving up off of the 50. If the dollar's weak, what does that tell you about gold and silver? It tells you they're going to be weak. So gold is breaking down here. Silver is weak as well. And the other thing that looks weak is volatility. So let's put this together. I apologize for my flightiness. Again, I'm post red eye. The indexes just look like they're slowing down. I showed you some of the underneath that show that breadth is maybe contracting. That NYSE AD line turned over. I showed you the 12-week AD line hit the reversal zone. I see a lot of things that say the market probably needs to pause here. Then I looked at that seasonality, and all the bear funds are down. That means the market goes up. So it'll be interesting to see. I do think caution's warranted after we've had a move. And just to put a number on this move is if you came into the market and said, I think we're done going down, and you bought not at the low on the 26th, but you bought at the open and you're still holding, you are up a whopping 17% in 44 days. How often do you see that happen? 17% makes a good year. All right, so once I've looked at the major indexes, I can't believe I was flighty, not usually flighty, and then I go to the industry groups, warehouse view, and you can see top down I got 174, 2-day force up I've got 63, 2-day force down I have only a couple. I've got 3: home products, mass merchants, and healthcare supply chain. If I look at the 5-day up, I've got 55. If I look at the 5-day down, I've got 37. So clearly, looking at momentum, the momentum is to the upside. Those numbers for up have come down over the last couple of weeks. So let's look at 2-day up, and let's look at some of the leading groups. Specialty pharmacy. Let's take a look at the top 10, or at least the ones that are above the index. Biopath Holdings, I would avoid, despite the beautiful looking pattern. Why? I get nervous when I see a stock that has a 1.5 million average and has 58 million traded. I also get nervous when a stock has had a 20-to-1 reverse split. It did have a big move. I didn't see any obvious news. As I told my son, who's been trying to trade it, these things are manipulated. Be careful on this one. Horizon Pharmaceuticals. This one I own, and I own it because it's had decent earnings growth. And look at this going out in 2 quarters. They came out, this must have been the quarter we just reported on. On this date, they had a beat, but they actually opened up, gapped up, traded down to a loss, and then closed back up near the open, creating sort of a jackhammer signal, but still red, meaning they closed lower than they opened. Then the next day, and why would you not release this at the same as your earnings report? They had some positive clinical trial news, and they had a viable gap up. They actually had a viable gap up both days. I'm in this stock. Now, what did I do with this stock? I just rolled I rolled my 20 calls up to, I think, 25 or 26 calls, and took some profits off the table. Also on Amarin, I got into Amarin on my buy signal here. Actually got in the next day. I found it that night. They had a viable gap up, mobile breakup from a squeeze in Kahuna, and it had another up move on Friday. Amicus, I don't know full. They used to have a diabetes product. Diabetes is hot. I just don't know where they are today. Breaking above the 200, you see the industry group strength, a big kahuna. Something's going on there. Don't know enough to tell you. TG Therapeutics is a preclinical company. Had some positive trial news over the week, in the week's end, and they had big volume up move. I may buy some of this. Why? There's a shortage of stocks in the oncology space that can be purchased. Companies like Loxo was bought by Lilly at a substantial premium. And so I start collecting these small guys that have a couple of assets in case someday they become a takeout. I like to buy things when they've been basing and break out. I should have bought it back here. But I think I may take a little position in TG Therapeutics. Guardant Health, too far gone, a oncology diagnostics company, just has had a great performance since its IPO. GW Pharma, this is the first drug company to have CBD product approved for epilepsy, I think, in children. Beijing is a Chinese company. They had actually had lousy earnings. They had some bad numbers on some Celgene products, which I think spooked some of the Celgene holders and maybe even affected Bristol Myers. But they had a nice pop on Friday. I don't know why. So specialty pharmacy remains strong. Within this group, you'll also find Canopy Growth, Kronos, and the other marijuana stocks. Biotech, number 2. talk about some of these because I know these very well. Puma Biotech, they have a oral version of a drug called Herceptin. Like Herceptin, it's had tepid sales. They had an earnings report out. They surprised. They had a buyable gap up. Is this something you want to go out and buy? That's a pretty big jump. It still doesn't make any money, but I'm going to put that on a list to watch. Intercept, they make a drug for NASH. That's a liver disease. I didn't even know it existed. The ironic thing is I just had a sister-in-law pass away of end-stage liver disease, and she probably had NASH. Why am I interested in this? Because every time it's pulled back to the 200-day moving average, it's gone back up. It undercuts and rallies. It looks like it's at that point of rallying. Portola, don't know much about it. It's broken above the 200. It's had a nice little run like some of the other leaders since December 26th. This is why owning some of these small biotechs rewards you. Spark Therapeutics is a gene therapy play, and they just got taken out by, I'm thinking Roche Genentech, although I might be wrong. Let's see. Roche bought Genentech. Genentech was more of an oncology company than Roche, and they're a big oncology company. Let's see who's buying them. I still call them Genentech because I'm just old. Roche, as I said, so Roche, which is Genentech, is buying Spark. That's the kind of return you get when these things get taken out. Let's see if anything else looks interesting. I also don't know what's going on with this company, Intellia Therapeutics, but this is a pattern I like. A stock sold off. It's gone sideways. It's now broken above its 50-day moving average. Notice it's had 1, 2, 3, 4 kahunas in 6 days. Something's going on with this company. It's under accumulation. This is another one that I'm interested in. So healthcare is strong. In fact, I forgot to show you number 1, 2, 3, 6, and 12 are all healthcare related. So is 19 and 18. So if you go in the first 19, I think we've got 6 of them are healthcare stocks. So what does that tell you about the strength of healthcare? And here's another one in generic farming, and then here's healthcare supply. So 8 of the top 25. Medical equipment, I hope people actually listen to me here and do things, because not the first one. We'll look at Dentsply first. It's broken out here, a Bible gap up off of the 50 and 200 coming together. Mobile breakout kahuna. That's a pretty impressive move. It's starting to get maybe a little bit too much, too fast. It makes money. That might be one to look at. But this is a stock, and you go back and look at my video from April 6th, 7th, or 8th, whatever day I did it. And what did I tell you about Tandem Diabetes? I picked this stock for a number of reasons. I liked the story. It's been basing forever, and it clearly had started to move. But when I gave you this, it was at 6, and it was on April 8th was on the Sunday. On April 9th is when I bought it, and on April 9th, the stock was a little bit less than $6. And where is that stock today? Almost 72. It gave us another buy point back here. Probably too late to buy it right now. ISRG, they make robots. I always worry about competition for them coming into the markets. Dexcom, like Tandem, is in the diabetes market, which is a massive market. I know Kramer likes this stock. Kind of loosey-goosey looking for me. Align Technologies, Visalign, and here's the index. So there's a lot to like in medical equipment. E-commerce discretionary, since Amazon, those who've been following me, is my best position or biggest position. I get excited when it shows up at the top of a list. It's got a kahuna mobile breakout. It broke above its PSAR in a squeeze. To me, it's still underneath the 200, and I wouldn't be adding more or getting more confident in it until it breaks above that and holds. I do like JD.com. I'd probably buy it if it breaks above its 200-day moving average. It has decent earnings coming in, and it's one I've been a fan of for a long time. Mercado Libre, the eBay of South America, it's too extended for my taste. I don't own much Wayfair, and I'm kicking myself in the butt. This is an online, I think, furniture company, but I do own Hgsi, and Hgsi has had a nice breakout as well. Both Hgsi and Tandem were discussed on Kramer, and it's still amazing after all these years when he says good things, stocks go up. You want to have him on your side, that's for sure. So this is what I do. I go through the top 10. The publishing stocks have had a big move. I don't know this group, and I don't know anything about them, so I'm not going to even comment on them. But I will just tell you that they've had a big move. This is TGNA, Bible Gap Up. Look at Nexstar. This is one that's just broken out, made my leaders list, I believe. Gray Television looks the same. Something's happened here. I don't know enough to say what it was. Large Pharma. Eli Lilly has been the darling of the market for months. Look at how it's breaking out to new highs. It is extended. It doesn't usually move this fast. I'd rather buy smaller companies. And the one I was talking about earlier was AbbVie. Now, the chart looks horrible. I'll be the first to tell you it's clearly in a downtrend. But it pays almost a 5% dividend yield. And look at where we're sitting, right about where it's bounced multiple times in the past. So I'm going to keep an eye on for AbbVie. I wouldn't buy it until it demonstrates that it's actually changing its pattern, is actually going up. Specialty apparel, a lot of this is driven by Gap. And not that Gap had blowout numbers and just blew everything away, but Gap is splitting up and separating Gap and Victoria's Secret on one side from, not Victoria's Secret, Athletica from the Old Navy. So on that news, it gapped up. It brought the whole group with it. Foot Locker up on Nike news, although it sold off after it opened. L Brands, these don't look very good to me, clearly driven by the news from the Gap. Oil exploration and production. I have a couple of these. They don't look great. They're all down in their pattern. But if you look at them, EOG, Pioneer, Devon, Encana, EQT, Accidental, they all have the same chart. They've gone sideways now for a couple of months. I have some. I don't feel compelled to run out and buy any more right now, to be honest. Application software has been leading the market. C Limited, I know what this was. I kicked myself in the ass. I pointed it out to you. Meant to buy it down here when it broke out. I liked the story. And it just took up, and then it had a Bible Gap up here. Too far gone for me to buy it, but if anybody bought it, congratulations. I'd probably hold it and let it run. Talking about let it run, this is Twilio, and it's running nicely. Tough to find an entry spot, but it's had a nice and continues to have a nice move despite not being profitable. Activision, not so much. Salesforce.com looks great. The problem with Salesforce has got earnings after the hours, after the market close on Monday. So that was 9. In the 10th group would be infrastructure software. Somewhere it's had a big move already, probably too much for me. Plus it had a Jeffrey sell signal come in. Microsoft Corporation, I don't usually own this anymore. It's kind of slow for me. ServiceNow looks great, but it's probably run too far too fast. Palo Alto Networks putting on a flag after a big run-up on positive earnings. Again, is it too far too fast? Oracle, the same story. OKTA, the same story. So these have been out-of-control leaders. They don't have a whole lot of earnings. And I guess that's enough to look at. So, to the downside, I didn't see a lot I liked on the top down on the groups. I did, and let's show you kind of some of the things I came up with for the week. So the first thing is I want to look at my not Canary index, but the Scott JAS index for March 3rd. Let me put this view on. So I got 17 stocks, no more than 2 per industry group. These are leaders in the market right now. It's not a message to go out and buy. It's a message to watch this index to see if there's evidence of the market turning over. I wouldn't go buy them. I own a number of them. One of my favorite performers is Chegg. And you can probably see why. It's been in a beautiful, tight uptrend. Sorry about the yawning. Remember the comment about the red eye. One that I'm kicking myself, another one in the ass on, is Hgsi, which I called out down here and down here. And look at the run it's had since the beginning of January. That was a day to buy. Kahunas, Eureka on the market, pocket pivot, positive Jeffrey indicator, mobile breakout from a squeeze. I talked about it. I missed it. I've done very well this year. You just can't buy everything on the market. I do get a lot of questions about how am I doing. I came out of the market. I got up to about $530,000 on $1 million base, so a little bit over a 50% return by the middle of January. I then sold off, but I'm now back at highs of the year, so I'm up about 55% on my main trading account. This isn't trading small numbers of stocks. It's not one stock with a big return. So my techniques of looking for pullbacks and uptrends, how I trade them, how I teach people, this is not the first year that I've done well. Last year was another good year, as was the year before that. I've been trading for a long time. What I do on the weekend is I try to come up with a list of stocks that I might look at for buying. I then put these stocks into a radar screen. I might set some trades up on them, and this is the list of stocks that I came up with. Now, this is from a bottoms-up review, but look at the groups: application software, biotech, medical equipment, life sciences, oil, gas, specialty pharma. I'm a big believer in top-down approach, and it's amazing how many stocks end up coming from those groups. Let me show you a couple that I may not have pointed out to you that I'll be looking at. Bloom Energy is a commercial real estate and commercial residential building equipment and supply. It's an IPO. It sold off hard. It's had a double, triple bottom here. It looks like it's breaking out. It's a cheap stock. I won't put a lot of money in it, but it looks like a beaten up stock that wants to go higher. Contrast that with something like Team Holdings. You know, it's probably right in front of my face. It's called Altasian. Look at this beautiful run here. Pocket pivot, Kahuna, a little bit of a breakout on Friday. I think this is still buyable. Team or Altasian Ordinary. We talked about TG Therapeutics. I showed you Amarin. I like Burlington, but I got to wait for earnings to come out. I will not chase it into earnings. I like JD.com. Got to get above the 200. But this is the list of stocks that made my buy list. Now, I put these stocks into a large radar screen in TradeStation, and I look for signals to come in during the day. And I'm monitoring my stuff, John's stuff, a lot of different things, looking for how the market is doing and whether or not I've got new signals. So I manage them that way. Some stocks I'll actually put a buy order on if it meets certain criteria. Care Diagnosis is another stock that I pointed out several times, and it has broken out of its box on Wednesday and Thursday. I think that looks impressive and one that I'm probably going to nibble on as well. I do pick stocks to short. I don't usually short stocks. I usually short I buy contra ETFs. I pick these so I can watch how they perform. When the market's really strong, the ones I pick to short actually go up on the week. But if the market's rolling over, these will probably lead to the downside. Most of them are not at points to short. You could certainly short gold here if you believe the dollar is going to firm or go higher and gold is going to drop, breaking below the 50, but it is subject to dollar and other things. Autodesk, a bearish engulfing pattern after a gap up. So you got a red candle high, you got a MOBO breakdown, a bearish engulfing candle. My indicator gave a bearish signal. You have pocket pivots to the downside on a huge volume day. A lot to say that this stock is going to go down. It's going to do what the market does. NetEase is another one. Failed at the 200 here. There's no moving average support underneath. I could see this stock dropping all the way down from where it closed at 217 down to where this one opened at 188. So you could get a 30-point move on this before it hit any type of support. APD, again, you don't short all-time highs, but I see a low closed doji, a bearish engulfing pattern, and a big sell signal come in on a stock after a big run. General Dynamics could not get above the 200 and is rolling over. WW Granger, similar, could not get above the 200. I wouldn't be shorting this until it broke below the 50. But these are all stocks that I think, if the market is weak, can roll over. CyberArk, I would not short again at an all-time high, but is it going to roll over, and is that meaningful? So I put it on this list. You see it had a positive close on Friday, but it gave up its gains, closing positive only 16 cents. And Baidu looks weak. WellCare looks like it's broken down. Boston Properties, too high for me to necessarily short, but it looks like it's rolling over. If the market weakens, something to look at. And Simon's Property Group looks like it's ready to take a dump below the 200, and that's about 170, and playing it down to 162 before I'd expect a bounce is something I might do. So again, I'm not going to go and short all those or any of those on Monday, but I'm going to use that as an early warning signal if I should get out of the market. So what have we done today? I showed you what I thought of the market, where I thought there was some breaks in there. I had a few minutes of garbling because of my falling asleep while I'm talking because I'm post red eye. We looked at the markets, which I think are slowing down and potentially will just go sideways, which would be very healthy. But there is a risk of at least a short-term pullback. We looked at the top 10 groups. I showed you how healthcare is dominating. I introduced you to my new index group of looking at winners, and as far as the recent winners, looking to see when they roll over. I showed you some of the stocks I'm looking at, long and short. On this note, I'm going to say goodbye and go to sleep. Have a great month. I'll see you in April. Be careful.